All right. Hello, everyone. Thanks for tuning in. I am Mark, aka the stock market jobber. It's kind of weird how I like to refer to myself in the third person, but yeah, whatever, man. It's just one of those things, you know. It was probably in a movie somewhere. But anyway, I just want to take a look at SPY and some of the things that might influence it. Today was kind of a pretty, I don't know, a non day in a lot of sense. I mean, if we look at the S&P 500, the SPY is the ETF that tracks the S&P 500. People like to call it SPY because the symbol is SPY. All right, so basically this morning or today, we changed 1 basis point, 1/100%. Now, because I'm a market, whatever, junkie, to me, that's amazing. There's 500 stocks here. There's millions and millions of people investing in it. There are trillions and trillions of dollars. It's almost like for the market to not move is like more hard to believe than the market to move. I mean, I don't know, whatever, blah blah blah. Anyway, we just had a basically a flat day. So one of the reasons why the market has been rallying is because of what's going on in the bond market and interest rates are going up. So here's our I like this bond ETF. I don't recommend trading or whatever. I mean, I'm not recommending not trading it, but I just kind of keep an eye on it for and we in the community here, I shouldn't just say me because we're really building a nice community. And I got some exciting news. We're going to be launching our weekly penny stock review for members. So make sure you check out the join button. We're not there yet, but it will be soon. All right. Anyway, let's just take a look at this and let's just apply some technical analysis to what might influence the markets over the next few weeks. So when bonds go up, yields go down, good for stocks. When bonds go down, bad for yields. All right, let me say that again. When bonds go up, yields go down, good for most stocks. When bonds go down, yields go up, bad for most stocks. So in order to get a clue or an idea as to what's going on in the S&P 500, I think it's going to be pretty important to watch over here what's happening. Now, notice this classic, perfect, textbook descending triangle pattern. I don't pay too much attention to most patterns, but ascending and descending triangles, I've been doing this for 25 years. They are pretty reliable. It's not a guarantee, but we have to understand what this illustrates. The buyers are hanging out down at 92. They're like, yeah, whatever, man. Cool. Yeah. The sellers are getting more aggressive. As time is going by, they're willing to accept lower prices. So when we see these tops forming at a lower price than the former top, we call this lower highs. And this shows that as time is going by, the sellers are just getting more aggressive. The buyers are chill. This sets the stage for move lower. And that's what happened. All right. Technical analysis lesson 1 there. Now, technical analysis lesson 2. All right. A lot of times there tends to be resistance at levels that were support. People bought here and here and here and here and at the support level, and the price fell below it, and they regret their decision. And they say if it gets up to this support level, the level that was support where I bought it, I am going to try to get out at break even. I bought it at 92. It's at 88. If it gets back to 92, I'm out. All right. Now, a lot of times when something gets to resistance, some of these people that want to sell, you got all these sellers, resistance level is a level where there's more sell interest than buy interest. Okay. Some of the sellers start to undercut each other. Some of the sellers start to say, you know what? I'll give up a little bit of my price here because I want to get my order. It's more important for me to get my order executed. Back when I was in the institutional trading world, if I had a meaningful order on this, trades 44 million shares a day. All right, let's just say I had, a million shares to sell. Okay, gets up to 92. All right, I'll sell all my million shares at 92 if I can. Someone else is like, wow, that dude's got a lot of stock for sale. The sellers are going to go to him. I better reduce the price I want to sell at. So the sellers come to me. So I'm going to go to 91.90. Now this institutional trader's got this big order. They have to make a decision like, what's more important, price or volume? A lot of times it's volume. So maybe someone sees that and they go to a lower price. They go to 91.50. Someone sees that and they go to 91.30. Bottom line is this: a lot of times when things get to resistance levels, they tend to sell off. Now, the reason why I'm pointing this out is because if this gets to resistance and starts to move lower, that pushes interest rates higher. That will be negative for the S&P 500. So sometimes you can get insight into what's going on in one part of the market by looking at what's going on in other parts of the market. So again, S&P really not too much going on today. Short term, this level around 513 was support, kind of in support. I look for some support there. Really, nothing dramatic or whatever. All right, I think here's what we got to watch other than the bonds is the tech sector. I mean, obviously, the tech sector is always important. It's the biggest sector in the market. You can actually look at this here. If you go to SPY, SSGA, the State Street, they're the people that run this ETF. And you can get your fact sheet up here. You could see, in a particular ETF, what are the holdings? And here are the different sectors. So we always look at these sectors because a sector, the way the sectors act can give you insight into the way the S&P is going to act. And then within the sectors, the way the industries act can give you insight into the way those sectors are going to act. And then it depends how far down you want to go. It's like the old, those like Russian dolls, you like pop one and there's another smaller one under there. But anyway, if there's one thing to watch to get insight into which way this broader market is going to go, it's right here. All right. This particular level around 204 was really important for the tech sector. It was support. It converted into resistance. People bought here. They become remorseful when the price goes lower. A lot of them say, hey, if it gets back to my price, I'm going to sell if I can get out at break even. So remorseful buyers placing sell orders has created this resistance. So I think however goes this XLK, SPY is going to follow. Sometimes the markets are complicated, but sometimes they're relatively simple and there's only one or two things to focus on that can kind of give you insight into what's going on in the broader market. So I'd be watching the bonds. If bonds start to go lower, interest rates will go higher at the same time that this support breaks and the tech sector starts to go lower. Well, that's going to be pretty bearish, and that's probably going to tell us that the S&P is going into a new leg down. All right, everyone. Thank you so much for being here. Please come back tomorrow. Make sure you check the join button on the YouTube page here, because like I said, we're starting to have a membership thing, and so far it's been a great community. We're building a school, and that's it, everybody. So I hope you have a good night, and thanks for coming here, and I will see you soon.